the trend is your friend. Markets tend to move in trends. A trend is a direction of price movement. Learning the overall market's direction is a very important part of investing and trading. It's important to ride the trend until it runs out of steam and changes direction. You need to maximize your gains by selling your stock at the peak at which the price starts going down, and buy again at low. Sometimes you might need to stay at the sidelines to avoid losses. Every markets have three trends: uptrend, downtrend, and consolidation sideways trend. Market in uptrend or downtrend can give opportunities to traders make profit depend on how they trade. But, in sideways, also known as consolidation trend, in which price movement can be within a really tight range and it's hard to make profits, you should know whether the stock market is in an uptrend or a downtrend. Investing in an uptrend is the most important to grow your portfolio. Chart patterns are not easy to be identified when you're a beginner and even for a professional trader. You will get better over time. There are many different patterns to look for when reading the stock charts. Various indicators are applied to charts. I will only explain about trends in this video. Please subscribe my channel to view future videos. How to identify a trend. In uptrend, price move higher highs and higher lows. Every time the market pulls back, it does not go as low as it did the previous time and then makes a higher high. In downtrend, price move lower highs and lower lows. Each high is followed by a lower high, and each low is followed by a lower low. A sideways trend, consolidation, is when prices move sideways in a horizontal range. A trend line is a straight line that connects two or more price points and then extends into the future to act as a line of support or resistance. Trend line can give you a good idea of the market direction. To draw a trend line, you need at least 2 points on a price chart. The low prices used to form an uptrend line and the high prices used to form a downtrend line. These connecting points should not be too far apart, or too close together. The most suitable distance apart will depend on the time frame. There are different time frames for trend: primary, long-term, that is 6 months to 1 year or longer; secondary, medium or intermediate trend, a few months, maybe 1 to 3 months; short-term is less than 1 month. A short-term trend can be part of a medium-term trend, and a medium-term trend can be part of a long-term trend. Trends can be nested inside each other. Shorter trend can be opposite direction of longer trend. There is short periods where the market pulls back in uptrend but only within the overall trend channel. Market may be trending upwards. That doesn't mean a price will rise every day, but it means that the price will have more chance to rise over time. Uptrend lines act as support. Demand is greater than supply in that area. The market is always about supply and demand. When demand is greater than supply, price will go up, that is bullish, bulls and buying. Demand is less than supply, price will go down, that is bearish, bears and selling. When supply and demand are equal, prices move sideways. At support line, demand is strong enough to prevent the price from going further down. General idea is the price declines towards support and gets cheaper. Buyers are attracted and come in to buy and sellers become less motivated to sell. By the time the price reaches the support area, demand will overcome supply and prevent the price from falling below support. As long as prices remain above the support line, the uptrend is considered intact. A break below the trend line indicates that trend reversal may be coming. If a stock's price has broken a trend line and goes lower, this information should be used as an alert that the trend may be changing. Downtrend lines act as resistance line. At this area, supply become greater than demand. People start selling at that point. As long as prices remain below the trend line, the downtrend is intact. A declining price combined with high volume supply is very bearish. A break above the downtrend line indicates that supply is decreasing and trend reversal is coming. A trend line's steepness is important to look at. When steepness increases, the validity of the support or resistance level decreases. A steep trend line results from a sharp advance or decline over a short period of time, is not meaningful support or resistance level. A trend line also gives us a great idea as where a stock price will fall or pull back and when you should buy. Traders use different time frames such as 1 minute or 5 minutes. Others look at daily charts or weekly charts. You don't want to be the buyer when the stock is approaching a resistance level. More than one trend line can be applied to a chart. Channel lines, 2 straight parallel lines, one line connecting highs, resistance line, and another one connection lows, support line, can viewed as a channel. Overall markets and stocks often trend within a channel. The resistant channel line shows us where the next, higher high, should be found. Traders should exit at the highs and re-enter at the lows. The support trend line creates buy entry points to purchase the stock. Rising stock price will pull back and usually find support very close to the trend line. The longer a trend line, the more significant it becomes. 2 price patterns you need to pay attention. Continuation and reversal patterns. These patterns are also very predictable once they have formed. Continuation patterns usually represent temporary pauses in the existing trend. Price will be oscillating in the trend channel. Reversal patterns usually indicate that a trend reversal is ahead. When a trend is broken, a new trend begins. I will explain about reversal signs in future videos. You also need to watch out for breakout at resistant line. A breakout is a bullish price move that passes a resistance level trend line and continues to sustain higher prices until the next resistance level is reached. Breakouts are usually accompanied with a surge in volume. At resistance level, you could simply sell out with a profit, or you could place a stop loss order below the current price in case the stock price drop. Stop loss order is an order placed with a broker to buy or sell a specific stock once the stock reaches a certain price. In this way, your profit would be protected, and if price break out, you will have huge profit. When to buy and sell stocks. While you are investing or trading, you are not only trying to make profit but also you must protect your capital. After you first determine the primary trend, and it is in uptrend, draw a trend line and wait for the price to pull back to the trend line to buy. At support level, the risk of further price decline is minimal and the chance of price going up is high. You should buy stocks at that level and place a stop loss just under the previous low in case price fall further. There will be oscillations within the trend, but the trend itself remains unchanged. That means that you can trade these oscillations within the trend. As long as the trend continues, trend lines are good for entry and exit points in the market. Trading within the trend can be higher chance of profitable. Trend can be reflection of overall economy, a company's financial and earning status and other factors. As a beginner, you must first recognize trend's direction before other technical analysis. Thank you for watching. Please subscribe my channel for future videos.